Sir, we can start the proceeding, sir.
Yes, shareholders, very good afternoon to all of you. On behalf of Sulak Energy Systems Limited, I welcome you all for this 27th annual general meeting of the company. I now request our chairman to proceed the meeting. Thank you.
Good afternoon to all the directors, and I heartily welcome all of you for this 27th annual general meeting. We held in the corporate office of our company. Now we will go to the proceedings of the meeting. Ladies and gentlemen, I have great pleasure in welcoming you to this 27th annual general meeting of Sulak Energy Systems Limited. The requisite quorum being present, I now call the meeting to order. Let me introduce the directors and senior executives. Executive directors, Mr. R. Chellappan, Managing Director, Mr. A. Balan, Joint Managing Director, Mr. K. V. Nachepan, Whole-Time Director, Mr. V. C. Raghunath, Whole-Time Director, Ms. V. C. Mrinalini, Whole-Time Director. Independent Directors, Mr. G. S. Samuel, Mr. S. Krishnan, Dr. S. Nian. Non-Executive Director, Ms. Jayashree Nachepan. Senior Executives, Ms. R. Nikhila, Chief Financial Officer, Mr. R. Satish Kumar, Company Secretary. I would like to inform the members that authorized representatives of the statutory auditors, Messrs. Deloitte, Hoskins and Sells LLP, Chartered Accountants, Secretariat Auditor, Mr. R. Kannan, Partner, ARJ Associates, Internal Auditor, S. K. Ram Associates, and the scrutinizer, Mr. P. Suramurthy, are present here in this meeting. Ladies and gentlemen, the Register of Directors, Key Managerial Personnel, and the Directors, Shareholding and Register of Contracts, and the arrangements in which the Directors and KMPs are interested treated by the company in accordance with the provisions of the Companies Act 2013 are made available in the website, and the members may view the same during the continuance of this meeting after login by using their user ID and password. Notice to shareholders dated 26th May 2022, along with the addendum notice dated 28th June 2022 for convening the 27th annual general meeting, along with a copy of the annual report for the year ended 31st March 2022 have already been circulated through email to those members whose email addresses are registered with the depository participants or companies registrar and transfer agents, Cameo Corporate Services Limited. The requirement of sending physical copies of the notice of the AGM and the annual report for the financial year 2021-22 have been dispensed with by the circulars issued by MCE and SEBI. However, as per SEBI circular, if any member asks for a hard copy of the annual report, the company shall arrange the same. Accordingly, the physical copies of annual report have been dispatched to few shareholders based on their request. The notice of 27th AGM along with the addendum notice is taken as stated. The auditor's report on the financial statements of the company for the year ended 31st March 2022 does not have any qualifications or observations or comments on financial transactions or matters having any adverse effect on the functioning of the company. Auditors have given clean report. It has already been circulated to the members of the company. The auditor's report is taken as read. The secretarial audit report for the year ended 31st March 2022 has no qualification. EOT. In accordance with the provisions of the Companies Act 2013 and the amended rules, the company had provided remote electronic voting facility on the CDSL e-voting platform for transacting the businesses contained in the notice to all the shareholders of the company as of the cutoff date of 21st July 2022. The remote EOT period commenced on 23rd July 2022, 9 a.m. and ended on 27th July 2022, 5 p.m. The remote EOT module was disabled by CDSL thereafter. Members, as on the cutoff date, that is 27th July 2022, who did not cast their vote through remote EOT may cast their vote during the meeting, and members who have voted through remote EOT cannot vote again through EOT during the meeting. The Board of Directors had appointed Messrs. P. Iswaramurthy and company secretaries as the scrutinizer for conducting in a fair and transparent manner the voting process for the remote EOT as well as for the EOT during the annual general meeting. Now I request Company Secretary to proceed with the agenda for voting.
Thank you, sir. Dear shareholders, members who have not cast their votes through remote e-voting may vote now through e-voting by providing their user ID and password during this meeting. The e-voting platform of CDSL, www.evotingindia.com, and NSDL, www.eservices.nsdl.com, will be available for e-voting by members until end of this meeting. Following subject matter of the resolutions are proposed in the notices. Resolution number 1, ordinary resolution, adoption of the audited financial statements of the company for the financial year ended 31st March 2022, the reports of the Board of Directors and auditors thereon. Resolution number 2, ordinary resolution, declaration of final dividend. Resolution number 3, ordinary resolution, appointment of Mr. V.C. Raghunath as a director of the company. Resolution number 4, ordinary resolution, appointment of Ms. Jayashree Chepan as a director of the company. Resolution number 5, reappointment of statutory auditors Mr. Deloitte Hoskins and Sells LLP. Resolution number 6, special resolution, reappointment of V.C. Mrinalini as a full-time director of the company. Resolution number 7, special resolution, reappointment of Mr. K.V. Chepan as a full-time director of the company. Resolution number 8, special resolution to fix the terms and conditions in the appointment of Mr. R. Chellapan, managing director of the company. Resolution number 9, special resolution to fix the terms and conditions in the appointment of Mr. V.C. Raghunath, full-time director of the company. Resolution number 10, special resolution to fix the terms and conditions in the appointment of Mr. A. Balan, full-time director of the company. Resolution number 11, ordinary resolution, ratification of remuneration of cost auditors of the company. Resolution number 12, special resolution, approval for giving loan or guarantee or providing security under section 185 of the Companies Act 2013. Resolution number 13, special resolution, sale, lease or disposal of the solar photovoltaic module manufacturing plant as a whole or in parts located at Tabaspet, Bengaluru, Karnataka. The link for e-voting is already enabled, and the shareholders are requested to cast their vote. Thank you. Over to Chairman.
Ladies and gentlemen, to conclude, I thank you for sparing your precious time and for patiently listening to me. Now I request Mr. R. Chellapan, our Managing Director, to address the shareholders regarding the performance of the company for the financial year 2021-22.
Thank you, Chairman. Good evening, everyone, and I extend a warm welcome to the 27th Annual General Meeting in a hybrid mode. So, as you all know, the world is going through its own difficulties caused by COVID for 2 years, that is starting from March 2020 and until recently, and still it's going on. And when the world is just about to turn around from its disturbances caused by COVID, the war situation, Russia-Ukraine war is giving us additional worries in terms of steel prices going up, fuel prices, foreign exchange fluctuations are unpredictable, and the situation is going very volatile all over. However, our company has performed very well during these tough times, and all gone through our financials. And first of all, I would like to thank all the activity heads, our HODs, the business vertical heads, and all for having supported the company during the tough times and helped the company achieve good performance. So as you all know, we have four major business verticals in our group. One is the manufacturing. We do manufacture solar photovoltaic modules, module mounting structures, and the balance of systems. And in Amex, we produce castings and we do export. So this is all regarding the manufacturing activities. And then you all know that we have a very good distribution network for our products. The products include complete range of solar power generating systems, including PV modules, mounting structures, and the electrical electronics balance of systems. Our third vertical is rooftop implementation of solar photovoltaic complete projects and the EPC contract for corporate customers and government projects. And our fourth strong vertical is IPP. We as Swelect as an independent power producer, we have been making steady growth in this area as well. And as you all know, we have 11 subsidiaries. 2 of them are overseas, one in Singapore, one in USA. Amex is a subsidiary company in the foundry products. Then we have 6 subsidiaries in the 100% owned IPP category under Swelect Energy Systems Limited. Also, we have 2 more subsidiaries under the IPP, but they come under serving the group captive power purchase agreements with leading corporate and hospitals. You all know that we have partnership with Hudson Agro. They have signed more than 30 megawatts so far, and then it's still they're going strong. We have Prashant Hospitals and then Mudra Finance and so on. And this list is very short, but it's going to grow more and more. So as a company, so with regards to the individual vertical performance, as I told, manufacturing, distribution, the rooftop and EPC program, IPP, the individual vertical heads, after my discussion with you, they will present with the numbers and what kind of program we have on hand through PowerPoint presentation. And also our company is, almost future ready, I would say. One is enhanced module manufacturing facility, adapting to new technology. This is very important to stay in the competition and march forward with regards to solar business and as a, remain as a strong manufacturing company. We are also into energy storage systems. You all know that ESS, it can be hydrogen based and battery based. So energy storage system is, as a business, it's getting its strong footprint all over the globe, and this is going to be a very good opportunity for Swelect Energy Systems Limited. As you all know, from 1985 onwards, as in the past we were Numeric, known as Numeric Power Systems Limited, we were handling batteries and power converters for so many years, and transition from UPS business to solar business. We are now handling green power. So combination of our green power experience and the past experience in power management, uninterruptible power supply management using batteries of different kinds, we are in a very best position to march forward with the energy storage business as well. And in addition to that, we are also exploring the various green energy access, including green hydrogen and so on. But it is too early to comment about it. And also we generally ramp up our growth by building additional infrastructure and sales network and business growth as well. So the you would have noticed through our financials that there is a need to improve the current ratios, for which we have taken adequate care in terms of making the growth in the current assets area, and then improve the top line, and then reduce the borrowing or current liabilities. So we have set a very nice platform for future growth, and Swelect is in a very comfortable position at this time to take the growth line forward. So I thank all our valuable shareholders, the contributing members in the company for the excellent contribution, and then I wish to thank you all, and leave the forum to Ms. Nikhila for presenting the financials. financial highlights. Thank you once again.
Thank you, sir. A very warm welcome to our esteemed shareholders. We welcome you to the 27th Annual General Meeting of our company, Select Energy Systems. I would like to present a snapshot of our year gone by and the year to be. Our standalone revenue for the year stands at 316.32 crores, and our consolidated revenues are at 411.93 crores. We are very sorry for the interruption. Is this So our standalone revenue for the year stands at 316.32 crores, and our consolidated revenues are at 411.93 crores. The profit before tax stands at 33.79 crores, and as a consolidated terms, it is 35.51 crores. The key highlights during the year: on a standalone basis, we have grown by a CAGR, compounded annual growth rate, of net profits before exceptional items and tax at 22% on a standalone basis and at 37% on a consolidated basis. Our company has performed exceedingly well despite the various uncertainties due to rising costs, pandemic, and geopolitical issues. Our company has successfully commissioned 35 megawatt of IPP projects during the year, taking the tally to over 120 megawatt of solar assets built to date. Some of the major revenue streams, as our MD had explained, are through the manufacturing. Its strong manufacturing facility caters to solar PV modules, module manufacturing structure, MMS, balance of systems, which enables major components of a solar plant to be produced in-house. Through our Amex Alloys Private Limited is a major manufacturer of iron and steel castings with a wide export market. Modules and MMS are also sold through our wide channels and distribution network. Our company is a major player in EPC market with this extensive EPC program and continues its relationship with its customers through the project's O&M and AMC contracts. Our company's IPP is a continuous source of income, along with REC certificates on the sale at REC certificate sale on the energy exchange market during the trading days. Our company has a consistent treasury income from its healthy investments, which is having a diversified portfolio across products like mutual funds and fixed deposits. To expand on that, our company has investments with different portfolio managers like HSBC, Barclays, and Credit Suisse, and also fixed deposits across banks with the best rates of interest. It is pertinent to mention that our investments generate return which cover almost 83% of our finance cost, thereby minimizing the cost of debt taken for expansion of our business. Our company as a group has a consolidated debt of 456.52 crores as against a huge solar asset base, land and building, pan-India, and cash investments totaling to 1,037.01 crores. Moving on to the year to be, our company is establishing a solar PV module manufacturing unit through its subsidiary Select HHV Solar Photovoltaics Private Limited with an installed capacity of 500 megawatt in Kuppapaliyam, Coimbatore. This module line is based on the latest high-density module technology. Our company has taken a detailed TEV study to understand and encapsulate the viability of the upcoming project. More on this will be taken up by our directors. Our company continues to build solar assets across Tamil Nadu and has an outlook to build solar parks in the upcoming years. Our company is also concentrating on catering to the C&I customers and has a strong order book for the EPC contracts. Moving on to Amex Alloys, our company is working on building a strong order book for its foundry division. We have set up an automated line to hike up the volumes, which is underway and is expected to cater to a larger market in the forthcoming years. Exports are strong despite the geopolitical and supply chain issues and is expected to continue its trajectory in the forthcoming years. I thank you all for coming. Thank you.
So in continuation to Ms. Nikhil's presentation on the financial overview, our directors who are also vertical heads of different verticals, they would continue their presentation for the benefit of our valuable shareholders. Slide.
Good afternoon, respected Chairman, Board of Directors, investors, auditors, and ladies and gentlemen. I extend once again a warm welcome to you all for the 27th Annual General Meeting through video conferencing. I would like to give few inputs about the key projects and the product sales performance of your company for this year 21-22. See, as our MD has already given in his presentation, so we have made a 35 megawatt of IPP project, which is generating energy and to our various customers. And this 35 megawatt of independent power producing IPP project now adds up to 120 megawatt for the company. So this gives a continuous income to the company over next 20-25 years. The next is the major points is about 34.5 megawatt, around 35 megawatt of EPC projects for various key customers. One of the customer is the dairy project, another few textile industries and other automated industries, and then foundry customers. Also, we have successfully commissioned about 3.07 megawatt of rooftop solar pumps, rooftop plants, and also solar pump projects. Rooftop solar projects pertaining to textile industries, private customers, offices, industrial customers, and also the water pump projects for the government projects. So all in all, a total of 72 megawatt of solar power projects were executed during the last financial year. It is one of the big jump from the previous 2-3 years. So you also, yes, this is the growth. What we are able to see is the standalone PV modules alone through channel sales, which has from 5.22 megawatt in 1920 Now it is increased to 19.43. And also from our Salem plant, the module mounting and balance of systems and accessories from 12.38. Last year it is 30.44 megawatt, and then this year it is 57.03 megawatt. So yeah, in spite of the difficulty in the industry faced due to the COVID and other financial implications, our important customers supported us because of our quality products and timely services. We thank them all. Next. Now, this is the EPC projects as shown in the other slide, from 20.23 megawatt 1920, 34.47 in the 21-22. Of course, as you all know, 2021 the projects were at finished stages or semi-finished stages. Approvals could not be obtained on time. So projects could not be completed because of employees could not be moved, the workmen contractors could not be moved. But from 1920, you will see it is at least about 175%. So this is as I was explaining you in the first slide, the IPP projects which has generated energy and supplying to various customers, which is from 86.50 million units in 1920, and of course it was almost stable in 2021, and now it is thanks to the 35 megawatt of new projects which has come up at, during the financial year at different calendar months. This has increased to 123.83 million units. So this year, 22-23, we hope this will multiply further. So with this, I think the next slide will be given by Mr. Najiappan, our director.
Good afternoon, respected board members and distinguished shareholders. I have the pleasure to present a few highlights of project execution, services, maintenance, and some initiatives that your company Select has taken in the last financial year. As our MD explained, last year has been phenomenal growth for our company with some special initiatives in spite of the pandemic that has been going on for the last 2 years. As a whole, Team Select has done work and toiled to reach the 100 megawatt or even the 120 megawatt as we saw in the previous slides. Thanks to the excellent leadership at Select and the team Select as a whole for reaching this landmark milestone. On the O&M activities, I would like to highlight a few points here for the benefit of our members. We manage 159 megawatt of plants and located in at least 8 to 10 locations of IPP and EPC locations, as you can see on the slide. 35 plants as a whole, maintaining an uptime of greater than 97.5%. And with a performance of greater than 80% on the performance ratio of the solar plant. Most importantly, this entire system is managed by a team of 85 engineers and 32 contract staff, involving a capacity utilization factor of 16.7%. So that's in a brief about the O&M activities that we do. Select, as you know, is one of the leading companies. Your company is a leader in the areas of operation and maintenance. Next slide. On special projects and key initiatives, you also heard our MD speak about our initiative on energy storage. As you can see on the slide, residential, commercial, and utility scale, all three market segments, we have established a proof of concept for the benefit of our customers, so that we are future ready, as our MD spoke, to take it to the market as and when the market matures to this level for energy storage. Other initiatives include a network operating center, which is really the nerve center for monitoring all our critical operations of plants. Today, we are monitoring 76 plants real time to ensure the commitments and upkeep of these plants are well maintained through the network operating center. Other initiatives include drone-based thermal imaging for solar PV health, and several other new initiatives that we will that are coming up through our international partners. So that's in a nutshell about the initiatives that we are taking up. Thank you for your time and wish you a safe new year ahead. Thank you.
Thank you, KVS sir. A very good afternoon to everybody and greetings. I take great pleasure in welcoming you all for the 27th AGM. Respected Chairman, respected JMD, MD, and distinguished members of the board, and our respected investors. We take great pleasure in presenting the industry highlights, especially the Indian solar industry. So my presentation is going to be on the highlights, that is how the solar industry is poised for the future in the coming years, and what is the challenges we also have to face in the coming years. If you see, this is a Bloomberg report which we are presenting today. If you pay attention to the chart which is being displayed, if you see the forecasted, that is from the wind and solar, which are the predominantly renewable energy sources of power, the solar power is estimated to, the solar industry is estimated to grow for the financial year 2022 and beyond is 9.8, that is almost 10 gigawatt of solar installations, be it rooftop, ground mount, floating. So that is the potential which the Indian industry holds for us. And then on, it goes on to add. And if you see, the increments are somewhere close to hovering around 20%. The reasons are, yes, like our MD pointed out, the industry is going through a bit of a transition, and with the BCD coming in, and also some of our key input raw material costs also going up. So we see a very organic but a very steady growth in the industry. So the Indian solar industry is expected to grow around 20% year on year. And some of the key highlights from our respected Honorable Prime Minister Modi ji, who had gone to the COP26 summit, and based on the commitments given by the Indian delegates, India has a long-term vision of going completely net zero by 2070 and a 500 gigawatt of zero carbon emission by 2030. So basically, like all of us know, the solar industry is more a policy-driven industry, and of course, it is a market-driven industry as well. But predominantly, the catalyst is always the government program and the policies for which all the Indian industries need to align. Can you go to the next slide, please? Sorry. So if you see the industry highlights, again, the Indian GDP is estimated to grow at around 7% for the coming financial year. So what this entitles is, we could see a healthy surge in renewable energy demand. Why we say this is because right now, India is looking at coal to solar program, that is, instead of installing more thermal plants or conventional power plants, India and the rest of the world, owing to the climate change, is poised to replace the thermal plants with solar. That's what is the program which India is also running, what you call as coal to solar. So that we see that the newer power plants which are going to come are going to be completely on renewables. So the healthy GDP growth of India is going to aid us. Having talked about the opportunities available, we also would like to highlight on few challenges any industry is going through, not just Swellite or solar. If you say the Indian inflation is set to be at 5% is estimated. So what that means to us is we will have an increase in input raw material prices. So that one, yes, we are confident by our team's leadership and stewardship. We can definitely kind of trim the input raw material costs by better volume game and better negotiation and better engineering. And cost of finance is also expected to rise. Needless to say, our colleague Ms. Nicola had presented, financially, your company is extremely strong. So we can definitely negotiate better rates with the banks, which we are confident of. Of course, we have short-term volatility in terms of rupee weakening against the USD. And of course, the LME challenges. But this is a global challenge, which is for any industry right now. So, but we are confident, and history has shown that Swellite has the resilience and the agility to definitely come across these challenges. And we as a team are staying committed to you as investors to definitely grow this business in an organic and a sustainable way. And thank you so much for listening to us, and wish you all a great day. Thank you. Now I hand over the podium to my colleague Mrinalini, who will be talking about our expansion facility, HHV Solar. Over to you, Visya.
Yeah, thank you, Raghu. So good evening, everyone. Good evening to Chairman MD JMD and all our board of directors and stakeholders here. So today I will just, since the rest of the team, they have covered about what we have done and what is the future with respect to the industry as such. Today I would like to just cover and talk about the technology changes that the industry is going through and why we are expanding and why we are expanding at a different location. So I'm of course the solar technology is decades old, but I'm starting going back a decade before, and then from there we'll just go through what has been the technology change and how we have also evolved along with the technology. So 2010, if we see, the industry started out with 156 mm cells with 2 bus bars, and which was stable for a while. And that time when HHV Solar had also started, we started with a spire line of 36 megawatt. And this technology, the spire line, the technology did upgrade from 156 to 156.75 and upgraded to 3 BB and later on to 4 BB. So the spire line, what we had at that time could support up to 3, and we did try, manage to 4. But in 2000, and by the time in 2015, we also installed a new line, which is called a TT60 line, a T-Technic 60 line, which could handle the 4 BB and 156 mm cells. The spire line could handle 3 BB and 156 cells. And in 2018, what happened is there was a change in both the size of the cell and the number of bus bars. So we had to increase to 156.75, 157 mm cells. And they were all 5 bus bar only. We could not get any more 3 or 4 bus bar cells. Hence, we had to replace the spire line with a new line, which is the Team Technique 50 megawatt line. And at that time, the industry had forecasted we might be moving to 6 or 7 bus bars. So hence, we expanded with, we added on the TT 50 megawatt provision to extend to 6 and 7 bus bars. That is what we had talked to a OEM and kept it ready. And we had also modified the 60 megawatt line, the existing 60 megawatt line, from 4 BB to 5 BB. So in the current facility, we were able to, and also in 2020, we the cell technology changed from 157 to 158.75, which is what we could run in the current facility at Bangalore, and which is what was going on as well. Then, as you know, India, we are followers, we are assemblers, and we follow what China follows and the world follows in terms of technology. Suddenly, in the last couple of years, the technology, evolved quite a bit, and there was a huge jump in the cell size. All the cell sizes were increased from 158.75 to 166, and the bus bars changed from 5 bus bar to 9 bus bar. And currently, by the time we're launching the new facility, in fact, the entire industry would have moved to 182 mm and 10 bus bar cells. So what has happened is that this affected entire India. This has affected entire India. So this year alone, entire India has gone through 15 gigawatt of production line replacement from to handle, instead of 158.755 bus bar cells, to 182 mm 10 bus bar cells. So we are also at a point where we came to a point where we had to expand for sure. We had to change the production line for sure. The technology became obsolete. So hence, while evaluating what can be done, we arrived at, in the same footprint of 40,000 square feet, what we are occupying at the current facility, we could accommodate 500 megawatt production line. Next slide, please. Can you go to the next slide, please? Yeah, so when we looked at, okay, what happens? How do we expand? How do we increase? How do we adapt to the technology change? And, there is definitely an economic impact, and, the cost of economies are achieved when we go for a higher scale. So how do we do expansion and upgradation of technology? So when we looked at that and looked at what is the current line in the facility, what do we have in Bangalore at Dabaspet? So first and foremost, like I said, the cell availability was a challenge. It's very difficult to get 158.75 mm cells, and whatever we get now are at the fag end of the, of the changeover of the technology. So the quality is not maintained. The prices are also quite high. Second is, even if we change only the cell handler portion of the production line, the size of the module and the cells we are not able to accommodate them in the rest of the production line. And since the bus bars have increased from 5 BB to now 10 bus bar system, and we anticipated to go to 12 bus bar system, and given the high volume of productivity, which means that there is a lot more automation that is required. And and in the, like I said earlier, in the current facility where at 40,000 square feet, we are having 100 megawatt system, 100 megawatt production line. In the new facility, we'll be having 500 megawatt production line in the same footprint. So this improves our efficiency and overhead overall. So we all know that we need to change the production line. And now the question comes, where do we change it? So now in the current facility, if we see the location of the stores, the location of the production floor, they're all located in different places. There is no provision there is no space to expand, both in terms of the production floor and the store. And also there is operational inefficiencies and difficulties and challenges which we face, because a couple of the stores are outside the premises where there is requirement for a road crossing. And also, our lease in the current facility ends by April 2023, and the lessors want their facilities back. So these are some operational difficulties we've been facing. And in terms of commercials, first and foremost, there is a heavy outflow expenses that are going out from a pocket, because these are leased premises and the cost of operations are going up. And the utilities are all 12, 13 years old utilities, and for the upkeep, the heavy investments are required, almost like an overhaul of pulling out the old utilities and reinstalling new ones. And in general, operating at that facility with different locations of the stores, raw material stores, the FG stores, and the production floor, we were incurring high overheads. So that's the reason why we looked at, okay, where do we have the land readily available, and so that our takeoff time is also quicker. Then we already had some land in Coimbatore, and that's how we decided to expand in Coimbatore. Yeah, please, next slide, please. So what is the new facility going to be? like we said, the technology is evolving fast. So we are also in the new facility ready to evolve with the new technology. So when we launch, we'll be straight away launching with 182 mm cells with a provision to handle 210 mm to 17 mm. This is in mono PERC. And in that, again, we are equipped to handle TOPCon technology, N-type technology, and HJT technology with a few customization changes and a couple of machinery replacements. And this new facility will be able to handle both monofacial and bifacial modules. And like we said earlier, in the same footprint of 100 megawatt, we will be able to have an annual capacity of 500 megawatt. And with the same manpower count of 100 megawatt, we will be able to produce 500 megawatt, because this is almost a 100% automated facility with just one assembly point alone having a manual intervention. Everything else is pneumatic, it's all gantry and robotic based automation. So the next slide, please. So this is how the new facility is going to look. On the right hand side, we have the production floor and the AC stores. And on the left hand side, we have the raw material stores and the ancillary services around it. So this is getting constructed at already our very first utility power plant, what we installed in 2012 at Kuppaipalayam. So this is getting constructed at that facility. We also have the advantage of wheeling the solar energy generated at Kuppaipalayam to service the power requirement of the production line. Next slide, please. So this is the front elevation. So we are hoping to get the line up and running by November, and the complete commercial production will start by Jan 2023. Thank you.
I have one question. See, the solar water pump has a tremendous market potentiality. Whether a company is making the effort to
Yes,
expand-
Chairman. Yes, Chairman. So what happened the last 3 years, you look at the rainfall across the country has been predominantly very well or above the average. Before that, if you look at in Rajasthan, we have done 3,000 water pumps. In UP, we have done 1,000 water pumps. In Telangana, we have done hundreds of water pumps. Karnataka, Tamil Nadu. Under different state governments program, we have been doing more than 10,000 in average water pumps so far. We partnered with Sun Edison, or we partnered with the local agencies, local nodal agencies of the state governments, etc. Since right now the water resources are abundant all across the country, right now the program is going slow. Otherwise, there is a program, and government supports renewable energy based, solar based water pumps very much. And every farmer will, in average, will invest only about 20,000 rupees. They get up to 5 or 7.5 kilowatt of system, heavily subsidized program. But right now it's going slow because of the abundance of availability of groundwater.
So the new tenders are to come. On free electricity for the farmers, that is also there. So the new tenders are to come and allocation. If you see, many of the funds were diverted for COVID relief. So these tenders were going slow.
It's proceeding, let the proceeding go on, please. Thank you.
What are you going to say? Five shareholders have registered themselves as speaker of this meeting. Was for queries on the company's operations and the annual accounts for the financial year 2021-22. The company has provided a link to the shareholders by email. We suggest that members confine their questions to the company's operations and the annual accounts for the year 21-22. In the interest of time and to give adequate opportunity to all the interested speakers, we request members to be judicious in the use of time in expressing their views. We will be pleased to provide any clarification that the members may require regarding the accounts and operations of the company during the year 21-22. We now request the speaker shareholders to express their view or comments. Name of the registered shareholders will be announced one by one. The respective shareholder is requested to click on to the link provided by the company and also have to allow camera and use internet with a good speed to avoid any disturbance. Finally, the answer will be provided to the shareholders' views and comments. Question by shareholders.
So you can read the name.
Dear shareholder, I'll read the name of the shareholder. Name of shareholder, Mr. Kapil Chopra, EPID client ID IN P00724 10172140. Your host, shareholder is there.
So Mr. Kapil Chopra has not joined, so you can go to the next speaker.
I'm moving to next shareholder. The name of shareholder, Mr. Vaibhav Bhatsaya, DPID client ID 12081600027577076. Mr. Vaibhav?
Yeah, he is available, sir. Give us a minute to on it.
Yeah, hi sir. Can you hear me?
Yeah, you can talk.
Yes. Yeah, thanks a lot for providing the opportunity, sir. So I will keep it brief and I will just ask few questions. Great, if you can respond to them point by point, that would be helpful. So firstly, on this 500 megawatt new solar module facility, if you can highlight the total amount that the capex that will require, that will be helpful. Secondly, for this old 110 megawatt of solar module facility, do we expect more write-offs going forward? Because I'm sure for that facility, we still have some plant and machinery, etc. that might be there in terms of book value. So do we expect more write-offs? Third is that on this whole, solar module manufacturing operations that we have. So it's just not to you, but if you look at all other listed companies also in India, this technological changes is quite rapid, and all the times it keeps happening. And people keep investing more and more money just to keep pace of the technology, without realizing that technology changes before the break-even point of the earlier capex arrives. It's just too frequent, and I think we should. I just wanted to understand your view on the long term, why we are in this business on a long term basis, and is it possible to just kind of review this whole operation? Fourth, on REC, we have recognized 23 crores during the year, but I remember in 2021 we had to take some reversal of REC income. So what is the probability now that we will realize this 23 crore REC income? Because that's a huge amount relative to the profits of the company. And on the foundry division, there has been sharp decline in margins. So I just wanted to understand what happened and why the margins suddenly declined. And also, secondly, on foundry division, from our European customers, are we seeing some kind of more orders from European customers due to energy crisis in Europe, which might be kind of some of the European competitors might be going out of business because of that. So I just wondering if we are getting more business. So these are the few questions. Great, if you can answer them point by point, that would be helpful.
Okay, Ms. Vaibhav, this is Chalapan. Thank you for raising these quality questions. To answer your first question, with regards to the total capex on the 500 megawatt new solar module facility, it's coming close to 100 crores of rupees. That includes the building of approximately 1.3 lakhs square feet of proper industrial floor, power system, backup power system, compressor for air for the pneumatic machines, the complete plant and machinery storage, material handling systems, and also the floor where we make the module assemblies and air conditioned floor. And with all that and access road for 40 feet containers in, out, and the docking bay, etc., the total capex is 100 crores as budgeted. Your second question is what would be the possible write-off in case the machines that are going to be out of production due to this technology obsolescence, and what is going to be the impact? The impact, there will be impact, Mr. Vaibhav, that is inevitable. The worst case can be up to 10 crores, but we are trying to see people who are using the manual soldering line or available cut cells, etc., for lower applications, not for very high-end applications like what we do. We are finding people either to take them on a lease basis or buy them out or whatever it is. However, as a worst case scenario, we have to provide for 10 crores if it comes to that. That's the worst case scenario. And then you talked about the technological changes, and we normally, having learned the speed at which the technology changes, especially in the renewable space, we are working on a 5-year TCO model for this new plant, anticipating, yes, what you thought is perfectly right. There could be technology obsolescence past, and then as the technology, it's the speed at which the industry grows, a lot of R&D and so on and so forth. So we are working on a 5-year TCO model. So it's a very fair normally to consider high tech in 5-year TCO. And with the capacity that we are contemplating and with the export opportunities, we could definitely be in a better platform, even though it is going to be a shorter time span with regards to the next obsolescence knocking our doors. And your fourth question was company has recognized REC income, etc. Yes, you are very right. So whatever we had to reset in terms of equity value because of the drop in REC sale, thank God, the industry and the RPO obligations again resumed back after the lull period. So we could place all the REC inventories. What happened was, it's not that we we placed it and then we could not sell or anything, because the trade itself was not happening due to central electricity authorities ratings, and the CRC was not constituted for a while. There were so many government delays, more of organizational delays. So all have been now put in order. So we have sold all our inventories in the range 2,100 rupees to 2,400 rupees. And we could recover all our, REC inventories back, and then the equity reset has happened. So practically, we have not lost anything. And your question number 5. So coming to the foundry, question number 5 and 6. What happened, if you look at last year, particularly, the steel prices shot up very steeply. And also the LME prices, various alloying elements, when I say alloying elements, nickel, chromium, molybdenum, and so on. So the market was actually steeply increasing with no prior warning. That was a scenario with regards to raw material prices. You can also monitor through the LME price index, London Metal Exchange, or the Minerals and Metal Review. It's a global forum that will reveal what happened. And then the fuel costs, an impact of Forex, particularly when you export to Europe, when you realize your export proceeds in euro currency. Generally, in the earlier years, we were gaining it quite a bit, quite significantly. And, the reverse trend has, started. Euro has dropped from 89, 88, 87 levels to 82, 83 levels during the year, last financial year. And in this year, even there is a fall. So the impact was due to Forex, impact was due to fuel prices, the impact was due to LME steep increase of steel scrap prices. Okay, what we are doing is, we are also, in consultation with our board and the members, our audit team, etc., we are trying to minimize the impact with regards to cost of financing the expansion program and so on. So, it's a little bit of, the restructuring of ICD, etc. And, certainly we are very positive about making the foundries look much better. Out of the 3 foundries, if you look at, we present all 3 foundry results in a combined as Amex alloys. But of the 3 foundries, the steel foundries were doing good. The 2 of the steel foundries, one is Amex Alloys fan casting plant and Amex Alloys investment casting plant, they're all doing good. A lot of new products have been developed, market has been developed, and the iron casting foundry was not doing good because of restriction on volume. Now we are ramping up the volume with the automated molding line close to 750 tons a month. The ramping up is right now happening because the sand plant installation is complete and automated molding line installation is also nearly complete. So next year we should be easily crossing 600 to 700 tons of castings from iron foundry itself. So this is an investment phase. In addition to whatever is the market changes, it so happened the war has erupted in between 2 years of COVID situation. And, your foundries are more dependent on the migrant laborers. The laborers all went back to their villages in North India. And then the people who came back again, the not same faces, not the same workers. We had to do training. Every quarter we had to do training for people. So the industry has gone through it. I think we are enough, I would say in foundry language, annealed. That is, we have built more resilience. So that's what has happened, and we are very comfortable. Although the numbers are not speaking in the same tone as I do, but we have measures to overcome all that. Your last question, yes, we rely so much on European market. At least 70% of our exports are to Europe and 30% of our exports to US. US exports are definitely giving us very good support in terms of a dollar being on the high side. But on the other hand, 70% of the exports being in euro currency, there is a lull, and also the war situation has worsened it. As you all read the news daily, Europe is going through severe energy crisis, both in terms of gas, electricity, and petroleum products. And as Europe goes near the winter, the situation is going to be even worse because they may not have enough gas for heating their homes and the workplaces. So we have to pass through this phase, Ms. Vaibhav, and but on the other hand, we are also getting new inquiries. I hope all your 6 questions got addressed, Ms. Vaibhav, and if you want anything more in detail, probably we can share emails to you. Thank you, Ms. Vaibhav. Satish, there is another speaker.
Shareholder name, Mr. Ritesh S. Doshi, DPID client ID, IN 300-126-1093-6068.
Is available, sir. Give us a minute to enable.
Good afternoon, sir, and fantastic presentation and fantastic explanation of all the questions. It's very impressive to be a part of this company. Sir, I have few concerns like, I just need to know this, the new assembly we are putting up is a new one or it's a second-hand one? Because the cost structure looks so cheap,
Ritesh, the industry, if you look at globally, because of the, one side recession, on the other side, the supply is very much larger than the demand, especially the manufacturing machinery and so on. And also we need careful negotiations. So if you compare the plant cost per 100 megawatt or per 300 megawatt, let's say, the costs have come down. Earlier times, if you look at, I have visited a few companies in Europe and a few companies in China as well. For a 300 megawatt module of manufacturing module, I would say the facility, complete facility, the cost used to be something like 20 million. We are talking about less than 20 million. probably around 15 million or less than 15 million. And the capacity is 500 megawatt.
Right. Even
Right,
I think Tata Power, if I am not wrong, is putting at a much higher capex, the capacity they are talking about. I don't know too much about technology, but I mean, so this looks too impressive.
Yes.
I'll
See,
learn further after the AGM, sir. And few other questions I'd like to
sure.
know from.
Okay.
So many of our peer companies are finding it hard to pass the inflationary and operating cost to their customers. How, as a company, we are dealing with such situations, sir?
See, one is very important point is, Mr. Hitesh, if you are only a module manufacturer, relying completely on your customers who are going to buy your modules, you are going to be because you have to pass all the capex related, cost amortization plus the inflationary cost transfers to the end customer. Otherwise, you have to put, you have to write losses, heavy losses in your own system. See, if you look at our presentation from beginning, we have divided our business into 4 different verticals. One is a pure product sales, where we don't sell just PV modules alone. We supply PV modules, the module mounting structures, and the balance of systems all as a bundle deal through our channels. Okay, your module price might have gone up by 2 rupees per watt, example. Somewhere the dealer will get offset because he's buying the bundled project from us. Okay, so the distributors will have advantage over just merely selling the panels. Instead of that, they are selling the complete project components. So there is a kind of motivation for them. If you ask me what percentage of our business is relying on distribution, at least about 15%, let's say. Then comes our own rooftop program and EPC, where since we are an experienced player in power conditioning and then managing the projects on time and negotiation for copper, aluminum cables, mounting structures, also we produce our own mounting structures, we again have a competitive edge. See, end of the day, what happens? A developer will call supplier A, installer A, supplier B, installer B, etc., etc. When it comes to Swelect, we are a one-stop solution provider. So once we get the order, everything is supplied from in-house except the inverters and some of the transformers. See, that way we have better advantage. Okay, now, I think you got the point. Whether it is
Right.
supply or C, they have to have their capex amortization as well as the inflation has to be passed on, a percentage of it has to be passed on to the end user. But we are not selling part by part. We are selling the complete integrated project to the customers. So we are in a better position there. Next comes our 4th vertical, where we are IPP players. So even though our own projects are going to be costly to us, at least the money remains inside the balance sheet. Our asset value goes high. In any case, of course, cash flow is squeezed. I know that, and you know that, all of us are aware. But at least the price remains, the cost remains inside the balance sheet, where we get the depreciation benefits, etc. What we have to see is the net cost per kilowatt hour of power generation. That's where we have to see. If it is going to be in paisas, this cost difference is going to be in paisas as translated to project expense to units generated, then you have a marginal hit. You are not going to have a big hit, Mr. Hitesh. But the problem, I tell you, government has introduced the safeguard duty or additional duty for the module importers at the rate of 25%. And I think 40%. 40%, I stand corrected. As a manufacturer, the sell duty is only 25%. So it is beneficial for the manufacturer, not for the module importer. I think you see the distinct advantage what Swelect has here as a channel part, channel-driven company for distributing the products, including modules plus MMS, as an installer, and as an IPP company. I hope you are clarified about it.
Sir, my other question is, China, as we know, is a low-cost, large player in the solar module manufacturing. And also in India, as we know, there are three large corporate houses, Reliance, Tata and Adani have announced large investments in the sector. In this backdrop, how we are positioned to compete with Chinese as well as this Indian giants?
Okay, with regards to China, it is not the new problem. It is always the problem. But the modules entering India will go through 40% additional duty. You know that. Okay, there is some safeguarding happening for Indian manufacturers. Coming to Indian giants, Adani, Ambani, and Tata's, you know, they're going for investments mainly coming under PLI. Okay, they may have a plant, a large plant in Gujarat or somewhere under the PLI, which we can't just go there at this moment in time because the PLI criteria is only addressing the big brothers and not MSME cadre or, you know, size of our magnitude. Okay, so that means they will have their plant in, let's say, Gujarat. When the modules travel on road and come to this part of this side of the country, per kilogram, they are going to add their cost 6 to 7 rupees. And that difference itself is enough for us to compete in the region where we are very strong. And also there is ample potential. If you look at the presentation by one of the experts from US in regards to the EV charging, etc., the electric vehicles that market can grow only if we produce more and more renewable energy. The energy demands per house to charge EVs, there is no grid for that. And it cannot happen overnight. So meaning what? We will have more decentralized solar projects, which is very convenient for Swellect's nature of business. So we are ready for the future also there.
So, sir, one more thing. I mean, you said like Tata is talking of setting up a plant in Tamil Nadu, if I'm not wrong. So, I mean,
that is right. Yeah, but still, we have all the components required. One significant advantage we have. If you look at all other players, they talk about only module manufacturing.
Okay. We are vertically.
Yeah, we are a 360-degree, I would say 361-degree company that way, with past experience in power conditioning and then handling the power conditioning DC to DC or DC to AC, whatever. So that definitely will keep us ahead of the other players. But we have to compete. Mr. Hitesh, what you say is right. It is not a cakewalk. It's not going to be a cakewalk. We have to compete. Probably our capacity also can increase. Today we are talking about 500 megawatt, but we also can go to 1 giga by showing our effectiveness in the field and selling more. And export also open for us.
With you, with the
China
fantastic.
cannot export. Hitesh, China cannot export to America today that easily.
Okay.
That market.
Right. So, sir, by when can we expect our foundry business to deliver industry level margins? You talked about it, but generally on the profitability side, when can we,
Probably we can turn around once the iron foundry capacity is above 700 tons, which is not too far away. We can turn around the foundry business very much. As I told you, out of the 3 foundries, 2 are already making profits. It's not that they're all losing money. The iron foundry side, because of the capex involved, and we are not, I would say, undersized with regards to iron castings. And good thing about is, I had 2 trips in Europe in the last 4 months, and then we got a lot of new inquiries for iron foundry. Iron foundry will overtake steel very soon.
Okay. Sir, we have also invested in lithium-ion battery-based ESS vertical. How much we are planning to invest and what can be the revenue potential and profitability from this vertical?
Okay, Sitesh, we are positioning ourselves as a system integrator to start with. When it comes to ESS, we are going to be only a system integrator. So we have done enough of proof of concept, evaluated products, and then we have installed in our own facility. We are running a 200 kilowatt energy storage system that will run in the peak shifting program or peak shaving program. Peak shifting and peak shaving.
Right.
You know, the peak hour tariff starts from 6 to 10 p.m. During solar hour, you put the energy in the battery and then supply the battery and stored energy during the peak hour. That's called peak shaving or peak shifting. So that's what we are doing trials. I wouldn't say we are doing any commercial projects at the moment in time. We are doing trials. We are very much successful now. So we'll be all set to participate in tenders. So that's what we say, we are future ready, getting future ready.
What kind of capex we can do in this vertical, sir?
There is no fixed number for that. If you get 100 inquiries, if you are successful in, then the size of the 10 orders will decide what is the capex. And it's more of a working capital, not capex.
Okay, right.
Yeah.
And okay, sir, just one last thing I was very inquisitive about. We have been consistently appeared under the Bloomberg Tier 1 solar PV module and mounting structure manufacturer. Could you please explain a bit more about this and its significance, sir?
Okay, Ms. Hitesh, assuming you are putting a plant, I wish you will do it, a 10 megawatt plant in somewhere in Maharashtra, for example. You go to a bank.
Right.
The bank will ask you what module you are using. Are your modules chosen for your project, are they bankable?
Okay.
Your question, you will check with I will check with my supplier and come back, or I will check with my consultant and come back. That's going to be your answer. What you will do, you will check whether these modules are qualified by the world's competent agencies under the head called bankability, bankable modules. So consistency in maintaining Bloomberg rating assures the customers that we are one of the companies in the globe to supply bankable modules.
Oh, great.
So we have to be there.
Okay. So, sir, I support all the resolutions and wish the very best and good luck to the management. Also want to thank all the employees and our company for their support. Wishing the entire management and workers good health and success, sir. Wish you all the best, sir.
Thank you, Mr. Hitesh, for your wishes, and you have been one of course, all our shareholders are great, and you are one of them. Please stay with the company. Thank you.
Thank you, sir. Wish you all the best, sir.
Thank you.
Next shareholder, Mr. Dinesh Patecha, DPAD client ID 120189 followed by 70564.
Sir, Dinesh Koteja sir has not joined, sir. We move on to the next one.
Next shareholder, Mr. Yashvi Kotari, DPAD client ID 120415001812215. Mr. Yashvi?
Yeah, is there. Yashvi is there.
Yashu Kathar, sir, kindly unmute and speak.
Hello, am I audible?
Yes, Mr. Yashvi, please go ahead.
Yeah, sir. Thank you for the opportunity. So I have few questions I wanted to ask. So as of 31st March 22, we had inventory around 160 crore in our balance sheet. And after the imposition of duty on solar modules, the prices has increased up to 50-60%. So, sir, can we expect some good amount of inventory gain in next few quarters?
Kotari, the company had inventory because our order funneling, if you look at our order book, or the funnel was so strong. So in order to avoid any uncertainty to the customers, we had the inventory ahead of time. Now we are installing those projects, which are totaling to almost 25 megawatt to 30 megawatt at this moment in time. So that inventory is very handy for us to complete all projects on time. And of course, we on the duties as well.
Okay. And sir, can you share CapEx timeline? When and what is expected revenue from this new 500 module manufacturing capacity? And also, sir, I wanted to ask, what are the reasonable margin in solar module manufacturing business we can expect?
Okay, Skotari, if you look at the current progress with regards to the capex, one is the financial closure has been properly done with the help of HDFC Bank and also buyer's credit through HSBC. With regards to the capex, there are no issues. Everything has been covered properly. The building is in progress. The complete machineries are sailing, and we are all set. That's the first part of your question. Second part, you said what margins? Okay, the margins, we can't work on a fixed margin, you know that. So depending on the volume, the price list will vary. So to give you a number in terms of what margins we can make, we can definitely make margins anywhere between 5 and 10%. And as you know, solar module business is only a volume game, not seller's market. You all know that.
Yeah. So, sir, what is expected revenue from new capex?
At least if you work at 80% capacity utilization, it should be around 1,000 crores.
1,000 crore. Okay. And sir, last question I had on. Sir, can you provide breakup of manufacturing business? Like what was part of solar module and what was part of electric products and other products?
If you have followed our CFO's presentation, CFO had presented vertical wise very clear numbers. What is for manufacturing, what is for distribution, what is for projects.
No, I want breakup of manufacturing business, like what was part of PV modules and what was part of electrical and electronic balance of systems.
If you take a project, complete project, okay, I give you the pie chart of a project. Say take whether it's a 1 megawatt or a 10 megawatt or a 100 megawatt project, approximately 50% of the value is modules. Skotari, you got it, right?
Okay. Yes.
Roughly 10% of the cost is for the module mounting structures, and another 15% for the electrical system like inverters, transformers, and so on. So you'll be left with at least 10 to 15% margin, clear margin.
Okay, sir. Okay. Thank you, sir.
Thank you, Ms. Kotari. All right. So I think, Chairman, the questions. Are there any other shareholders who would like to ask any questions? We have another 3-4 minutes time. Okay, then let them. Only these 5. Yeah. Okay. So, Chairman, back to you, Chairman. Sorry.
Thank you. The voting results will be declared along with the written results report within 2 working days from the conclusion of this meeting, and will be placed on the website of the company www.selectors.com and on the website of CDSL www.evotingindia.com. The same will be communicated to the stock exchanges, namely BSE Limited and the National Stock Exchange of India Limited. There is no other business to be transacted. I declare the meeting as closed. I thank you all for the cooperation in ensuring a smooth conduct of this meeting. Now I request Madam Jayashree Nachipan to give a vote of thanks.
Good evening to all. It gives me immense pleasure to deliver the vote of thanks of the 27th AGM today. First and foremost, I would like to thank the Chairman, Managing Director, Board members, and the shareholders for having conducted the meeting successfully through video conferencing. A big thank you to all the shareholders for being with us, for reposing trust in our company. I take this opportunity to thank our auditors, our legal counsel, RTA, Cameo Corporate Services, our bankers, Ministry of Corporate Affairs, Government of India, SEBI, and Stock Exchange for their professional guidance and support. My heartfelt thanks to our distributors, suppliers, customers, and the ever dedicated Swelect staff for their immense contribution for the excellent performance of the company. I would like to thank the CDSL for making this virtual meeting happen. Thank you, one and all.
We want to thank you for the excellent support.
Yeah, thank you, sir. With the permission of the chairperson, we are concluding this meeting. Thank you all for joining.
Thank you everyone for joining, sir. Thank you.
Thank you.